All right, what's up, YouTube? I am back. I'm going to be going over my swing trading concept that allowed me to make 150% in the past 3 months right here, as you can see. It's super easy. As you can see, I'll go over pretty much the theory that I use as well as the confluences, what you need to look for. And yeah, I'm pretty much around, I believe, 12 and 1 in the past 3 months. So it's definitely worked in my case, so I hope that you can apply this to your trading as well. So let's get into it. So going into this concept, this is a swing trade concept, which means that you're going to be holding these positions for at least two to 3 days, depending on what the week gives you or the month. So as you can see here, I'm going to be using the candle range theory. What this means is we have an example right here. This is a bullish candle. What the candle range theory is, when the candle opens and if it's a bullish candle, price tends to make the low of the candle first before coming in to make the high and then closing back around this range, right? So price opens, goes lower, makes the high, comes about down a low, and then closes. That's your bullish candle. And obviously the opposite happens for a bearish candle where price opens, it comes up, it makes a high for the candle, and then dumps lower to make the low, and then comes low back up. That's like a retracement to create this candle. And this happens on, the hourly, 4 hour, weekly, daily, and even the 1 minute. So you'll see a 1 minute candle, for example, like a fair value gap right here, as you can see. It'll come up, price opens, it'll come up, make a high, and then it'll reject off and go lower. So price is fractal, you'll see it happen on every single thing. So next, now that you know like the candle theory, what you want to wait for my concept is these are weekly candles. We're trading the week. You can even do the month, but I like to do the week, which means that I get to put in at least one trade a week. So inside of this weekly, we're waiting for the weekly to create either the high of the weekly candle or the low of the weekly candle to be put in. And then we'll target the opposite high of candle or low of candle. We'll wait for a 15-minute change in state of delivery or fair value gap, and then you'll have the stop above, the high of the candle, or vice versa if it's low of candle for a bullish. So right here, we're going to pretty much go over an example that I took last week for a 1 to 6, made about, I believe, 600, risking 100. So technical wise, when you're looking on the weekly candle, I can't really show you, what the weekly candle looks like when it was on Monday or Tuesday, but you can assume to see that on the weekly, it was a bullish candle like this, right? So that was a terrible drawing, but you can see price opens around here and we push up. We just keep pushing up. Let's say this is the weekly candle. We keep pushing up and pushing up on Monday, Tuesday, Wednesday, and we get this little projection right here. So in our minds, you can already see that the S&P just took out buy side liquidity. So you're thinking, okay, the weekly candle has to put in a low some time throughout the week, right? So when price takes out the buy side liquidity, this is when we're thinking to ourselves, okay, price took out buy side liquidity. This should be around the high of the candle, but we don't know yet. We gotta wait for confirmation. And this is when we could be looking for sells. So on Wednesday, you drop down into, let's say, the 15-minute. And we see here on the 15-minute that we have this change in state of delivery. And then hopping down to the 5-minute, we get this fair value gap right here that price is reacting off of. So I put in a put. Obviously, you can have a stop a lot higher. Because you're already at the top of the range, you can kind of hold your position above the stop loss, just because using candle range theory, at some point price is going to drop lower, right? So I had my stop above these highs. We had, target new day opening gap here, as well as here, as well as here. So I targeted Monday because this was when price opened. Price should go lower than Monday's open because if you remember from the candle, there was no low being put in place yet, right? So right now you're just looking at a candle that just is a body and a top wick. We don't have that low wick yet. So targeting low, you know, I get filled in here. You'll see prices, it's coming down, it's breaking structure. And then we get this little wick on Thursday, 9:30. This is the manipulation move. So now you can expect Thursday's candle to be a bearish candle because you have the opening price. It makes a high, and that's when, you know, price is going to go lower and then close like this. So this kind of move on a candle would look something like this, right? So price opens, it comes up at the 9:30, and now we're expecting this to sell, which gives us even more confluence that on the weekly candle, we're going to wait for price to put in that low. As we see right here, Thursday puts in that low, Friday it retraces. So super simple. We can go on to another example. Okay, so now we are going to be playing through this previous week, which was 2 weeks ago. And as you can see, I can draw out the weekly candle for you guys. Right now, the weekly candle has its open right here. You can see it made its close. Here, let me just redo that. This one. We get our close right here. We have our wick at this high right here and this wick down here. Obviously, it's a little hard to tell, but you get what I'm trying to say, right? So we see here we have our Tuesday as our open. Okay, we're waiting for it to take, you know, a buy side liquidity or sell side liquidity, which we get here on Tuesday, right? So we get our sell side liquidity here, and we see that price makes a low, and we see that Wednesday it comes back up, right? So Wednesday it's coming back into range, which means that it's very unlikely that we're going to keep pushing lower. You can even see this on the 4-hour, where the 4-hour gets disrespected right here. So, you know, we kind of also get this change, say delivery, and hopping down to the 15-minute for our entry. We can see here that there's a new day opening gap right here that is being respected, right? So you could have entered right here if you'd like, you know, stop below the candle right here, or you could have just waited, and you can see here that price breaks past this with the change in the state of delivery. And you could have entered right off here, stop, you could put it right below this fair value gap, and then targeting the high of the weekly candle. It's like, you know, something like this. You could even start targeting the all-time highs with, you know, confluence of ICT, you know, market maker model, bias, things like that. So maybe on like the monthly, we're looking to create that new high of the candle. So you could have entered here, you could have targeted these highs. If we go on the 1-hour, you can see right here, if you play it throughout, you'll hit your TP here. So, you know, you're holding it, low gets placed. Now we're just looking for the high. So I could play another week for you, but I hope that you kind of get the gist that you're looking for the high of the candle or the low of the candle to be put in place, and then you're basically just targeting the opposing end. So let's move on to one more example. All right, so here is our another example. We're starting on this week right here, Monday, Tuesday, Wednesday, Thursday, Friday. And you can see that price opens up, we don't make a high. And so, you know, throughout the week, we're at Wednesday, right? Wednesday, there's only 2 more days left to, you know, either keep pushing lower or making that new high that we're looking for, right? So we see here that price is now respecting this higher time frame confluence. Even going down into the 1-hour, we get this huge new day opening gap. And this kind of tells me that, it's Wednesday, we're already halfway through the week, and we just went super low, but we're respecting this 1 hour as well as the daily fair value gap. So in my mind, we're like, okay, the low of the week candle might be placing the low right here. So we're going to be looking for, a change in state delivery as well as respect to bullish confluences. So right here, you could have just entered straight off new day opening gap, makes that manipulation lower into the opening gap, and we're looking to target higher, right? So what is our next target? We'll be targeting at least the high of this week's candle. So you could have targeted the high of the Mondays. You can see there's no wick high candle. So we're expecting price to come back and make a higher candle from that. So if you play it out, you can see price automatically just rips open into it, and then you could have had second TP right here. If you wanted to follow this strat again, we'll wait for a 15-minute change in state of delivery, which would be this new day opening gap, you could say. But if you want it to be clear, you could have waited on Thursday. Waiting for this change in state would be this candle right here. So, higher, lower, higher, and then it pushes even higher. So here we get our change in state delivery. You could have entered right on the opening. We just shoot up and we take out all of these highs. So, and then that right there would be a 1 to 9. So, and then you'll see like the weekly candle, it makes a low and it makes a high. So that's really all you need. It's super simple. I love swing trading. It's a lot more stress-free compared to day trading where you're just stuck at staring at the charts. You're on the 5-minute, 1 minute, 15. This right here, you kind of sit back, you analyze the weekly candle, and then you analyze the daily, how it's reacting, what day of the week you're in, and then you scroll down to, the 1 hour, the 15, you look for a change in state delivery, or you're looking for price to be respecting all of those bullish confluences. So I hope this helped. Try it out yourself, back test it. Hope this video helped, and see you in the next video.